If you would like to retweet the stream, you're welcome to. If not, no big deal. I just tagged you. Up to you.
Thank you.
INX is on X, right?
What's that?
INX is on X, right?
Yes, it is.
Is it just at INX?
I think I don't even know. I don't know the handle off the top of my head.
No worries, no worries. I'll look.
Yeah.
I just. Is it all INX exchange?
You know what? Just, I'm gonna look.
Okay, everyone, let's get this started.
This one's INX_.
All right, welcome to the Naples Bitcoin Blockchain Group. We are a group. Oh, I left my water right. No, we are the Naples Bitcoin Blockchain Group, and our mission is to accelerate the peaceful adoption of the peaceful transition to a Bitcoin economy. And we do that by doing things like this: education and technical assistance and building community. So thank you for coming. We have a pretty packed program tonight, so I'm going to get us started with our Discord link. So we do have, if anybody's a Discord user, if you don't know what that is, you can ignore me. But if you have Discord, or you could, scan that and get on. We have a Discord channel or server, which has lots of different things on it. We do our meeting announcements on Discord. We also have lots of resources on there. And if you ever have any questions about anything, you can ask them on the Discord and we will answer you. So it's a really nice resource to have. And a lot of our community members are on there and can help you out if you're running into any trouble or have any questions. So that's that. I'll give you another second to scan it. A couple other things. We have several events coming up. So as you know, we also organize the Bitcoin Day events. And the next Bitcoin Day event is actually a partnership event with BTC in DC. It's a partnership with George Washington University. So there's an event on September 30th and August 1st at the Kennedy Center in Washington, DC. I'm sorry, October 1st. September 30th and October 1st, Tuesday and Wednesday at the Kennedy Center in DC. So if you feel like flying to DC and hanging out with us, you are more than welcome. That's the website for that is simply btcindc.com. btcindc.com. And we've organized 2 panels at that event, but there's going to be some top names in the Bitcoin world attending that and speaking at that, like Michael Saylor will be there, Jack Mallers, Adam Back, help me out, anybody else?
Larry Lepard.
Larry Lepard,
Jack
CJ, some of our, what?
Jack Mallers,
I said
Natalie
Jack
Grinnell.
Mallers, Natalie
The
Grinnell.
all-star lineup.
Yeah, it's a total all-star lineup, and we've got 2 panels there that include Larry Lepard, CJK, Charlie Shrem, Joe Gruters, who's now the chair of the Republican National Committee. We have also on our panels Dr. Sean Baker, Tiffany Cianci, who else, Paul?
Charlie
Tiffany,
Shrem.
Charlie Shrem, I said that already.
Dr.
Yeah.
Sean Baker.
Dr. Sean Baker, I said that again. What'd you say?
John,
Chris Sullivan.
got Trump in the house.
No, Paul Tarantino's not on there.
Eric Trump, American mining or American Bitcoin.
This is, October 1st, September 30th and October 1st. It's in DC though.
Most importantly, you got Jack Fife and John Michael Drew.
Yes. All right, so there's that. Then our signature event is Bitcoin Day Naples. Bitcoin Day Naples is right here in Naples, and it's on January 17th. So mark your calendars for that. If you go on to the Bitcoin Day website, bitcoinday.io, you can actually buy very inexpensive tickets to Bitcoin Day Naples now, and that won't last very long. Right now, they're priced at $99, and that price will go up soon.
I'll volunteer again.
Okay.
Volunteers?
We will need some volunteers, but not a lot.
Experience.
Yes, you are. Let's see, what else do I have? Tonight's meetup is being live streamed, and I've shared with you guys, with the group, a lot of times some of our channels. We have several channels on X and YouTube, and so this is the kind of the main one, Protocol Pulse. I don't know if you can actually see that, but it's Protocol Pulse HQ. Is the username on X, Protocol Pulse HQ. And from there, you can get to the YouTube channel.
Can you click on it so we can see each other?
Oh, you want to see the live stream? The live stream is happening right now while I stand up here. Where is it?
Just click on the logo.
Oh, click on the logo?
Yeah, just click on the logo. Go back.
Why don't you do one on a cruise ship?
Hey, now we're
I
talking.
just thought of it.
What happened?
You were just on the profile. It's forget about it.
There. There we are. All right. So anyway, back to that. So if you want to keep up with all the other things that we're doing in the space, you can follow this channel, and you'll see lots of interesting podcasts and other things going on. All right, did I leave anything out?
Just out of curiosity, while I have this opportunity with people in the room, Dr. Sean Baker, is anybody familiar with his work? Yeah. You know Dr. Sean Baker? So he's he's a Bitcoiner, but he's well known for his fitness stuff and his diet. He's a carnivore, and he's 60 years old.
I know.
And he's in better shape than most. So I wanted to make a fun little competition while he's in town for a series we're doing on his book. And I thought, if anybody knows a vegan that's 60 years old, I want to do a little fitness challenge. So if y'all know a vegan, yes. What was that?
4 years than that.
Do you want to do a fitness challenge with Dr. Sean Baker?
More than vegan or more than 60?
You're not
We're not vegan.
I am an omni. You're not a vegan, not a carnivore, I am an omni. So I can challenge you.
That's eggs.
I can challenge you.
I'll challenge you.
What's your stake?
When
What are the stakes?
Well, that's the steak is the steak.
I mean, like someone buys dinner.
Yeah, if the vegan doesn't, do too well, then we're gonna buy them a steak. We'll get back to the topic. If anybody knows someone who's very active.
How about opposite?
I got Facebook.
Oh, what if carnivore does?
Oh, then he's gonna have to reconsider his
Exactly.
life choices.
Yes.
But the guy is in phenomenal shape. He holds world records, right? It's gonna be hard to beat this guy. Right. Anyways, back to so we've got a very special guest in town. We are spoiled here in Naples with the selection of incredible, experienced Bitcoin OGs that we get to come here. So John will open the floor. Michael Moro goes way back to when people had to buy Bitcoin with duffel bags of cash, right? He goes back to those Wild West days where Bitcoin was not so, institutionalized yet. So let's open the floor.
Yeah, no, yes, thank you for that, Paul. But yeah, Michael is, he's an OG. He's a very knowledgeable person. He currently is working for this company, INX, which is an exchange. He'll probably tell you a little bit about that, but he's got a presentation to give us, and they also contributed to our expenses tonight, so thank you for that. And I'll just turn it over to you. You can give your a little more of an introduction than we gave, and
There's a lot.
All right, we're ready. Hi, everybody. Hello. Thanks for coming. I am Michael Moro. I am the Chief Strategy Officer of INX. And the topic for this evening is crypto RWA, which stands for Real World Assets, and tokenization. Looking back at my career in the crypto space, what's happening right now, and what does kind of the future look like in kind of this world of on-chain assets. I'm pleased to see so many people. I had no idea what I was signing up for when John asked me to come do this. But I live in New York. I flew down here this morning, and it's a pleasure to be in front of all of you. So, quick background on INX. So we are a fully regulated SEC registered trading platform for both tokenized securities and cryptocurrencies. The company was started in 2017, so it's been around now for going on 8 years. And the idea was, why do you need a Coinbase account and a Schwab account if you want to buy Bitcoin and stocks? Why couldn't you kind of do this under one trading platform? And so the company got started, as I mentioned, 8 years ago, to create that unified trading experience for both cryptocurrencies as well as securities, a tokenized form of securities. And that is what the INX platform does. We are SEC and FINRA regulated for the broker-dealer, and we have money transmitter licenses for the crypto side of the house. So we are heavily regulated, but the goal is to deliver a digital asset trading experience with institutional grade compliance and protection, but for the retail audience is the mission of INX. We are in the process of being acquired. There's a company called Republic, which some of you may have heard of. It is a crowdfunding capital raising platform that companies typically get listed and try to raise capital to kind of kickstart their business. But we are in the process of being acquired by Republic. We've been working on this now for almost 5 months. We are not yet done, but we're very close. So hopefully in the next few weeks, we will be part of the Republic family. Having said that, the views I'm expressing this evening are entirely my own and not necessarily those held by my employer, INX. Now that I've given my disclaimer, my lawyer should be happy. All right. So what am I here to talk about today? So I'm going to talk about a little early history of Bitcoin from my perspective through some of my personal stories, some war stories, as they say, in the early years. I want to talk about what's happening today. There's a lot happening today, both in the crypto world and in the tokenized securities world. And then we're going to talk about some future outlook and key trends. Before I get started, just so that I get a sense, how long have you guys followed Bitcoin, been in the space, owned Bitcoin? Like, what's the range of years we're talking about here? How many people in the last couple of years?
2 months.
2 months. Anybody more recent or in the 2-month ballpark? How about 5 years?
Been in crypto?
Yes, 10 years. All right, we've got some folks. So good. Some of the stories I'll tell that will then mean something, because I'm going to go back probably 10, 11, 12 years for some of the stories. But anyways, my background. So I graduated college in 2001, and I joined investment banking because that's kind of what everybody did back in 2000 and 2001. And so I joined an investment bank called Citi. And I spent the first 7 years of my career working at one of the biggest banks in the world. I was one of 330,000 employees, something like that at the time. But that's how I learned everything there was to know about corporate finance and how like companies get funded and things like that. Kind of the bare bones of Wall Street training. And then 2008 happened. Great financial crisis of 2008. And my entire group got laid off. One day I walked into the office and they said, "Hey, HR wants to talk to you," which is never a good sign, right? And both my managing directors, my VPs, all the way down, I was an associate at the time, about to be promoted to VP or so I thought. We all lost our jobs in January of 2008. And, but it was obviously, kind of looking back, an incredible blessing in disguise, because in the fall of that year, I started working for a small startup. I became employee number 30 at a small startup in New York. I went from 300,000 to employee number 30. And that business literally took me onto this career that I've had kind of in the crypto and the tokenized securities space. So we'll kind of get to that in a second. But I was the CEO of a company called Genesis, which was an institutional prime brokerage for crypto. That got started in 2013 and all the way up until 2022 is when I left Genesis. We were a startup of 7 people. When we first kind of got going, we grew to as many as 250 people. That's kind of the asset class grew. Headquartered in New York, but we have offices in London and Singapore and all of that, and have seen the highest of highs and the lowest of lows. And hopefully you'll kind of get a taste for what that was like as I kind of go through this presentation for you this evening. And sorry, I'm sitting down, but I have notes. I got to move slides around. It's much easier for me if I'm here. All right. When did I get involved in Bitcoin? 2010? I wish. But the first time I actually heard about Bitcoin was actually back in 2010. Greece at the time, well, throughout many periods of time within Greece, was having a banking crisis. And I remember watching CNBC, and there were Greeks running to like the bank ATMs, trying to get money out of the ATMs, but they had put limits, right? You could not pull money out of the ATMs because it set limits. and people were panicking on the streets and whatnot for this Greek debt crisis that was happening. And there was a small mention of Bitcoin as an alternative that CNBC was actually mentioning that some of the locals in Greece were talking about. Bitcoin price was 3 cents at the time. And if you listen to my beloved wife, she swears up and down that she told me I should buy Bitcoin back in 2010. I don't remember this conversation, but then again, she'll probably just tell me, hey, just like every other conversation, you don't remember it. All right, so the real actual start was in 2012 and 2013 for me. I mentioned that in 2008, I joined a startup, and that startup was a trading firm that specialized in trading illiquid financial assets. So anything that didn't trade on an exchange. So forget regular stocks and bonds and things like that, but we were trading like weird, esoteric, hard to value financial assets. And remember, in 2008, financial crisis hit, everything became illiquid. So the company was actually set up to do very, very well in an environment where the business world was in a bad place. And the company, I was a bond trader at the time. So I was trading a lot of the toxic financial assets. Remember the mortgage-backed securities and CDOs and asset backs and all the things that like Wall Street companies, like Wall Street firms have created that, in some cases became worthless. Well, I was trying to find buyers of guys that held these on their balance sheet. But the CEO at the time, he discovered Bitcoin in about 2011. And the CEO always had a very bearish view of the world. He was like, you know what, this money printing going on at central banks cannot last. Central bankers will always make the wrong decision because humans are going to make mistakes, and we cannot trust central banks in the way that citizens of countries all around the world were trusting central banks. And here comes Bitcoin. That was an alternative, right? That was programmatic. It was coded of how the supply ultimately grew and how it was distributed. And this software thing could be potentially an alternative to the way money was being created in countries around the world. So I know that we talk about nowadays treasuries of companies spending their cash to buy Bitcoin and put it on their balance sheet. But my company at the time, I'd like to think we were one of the first ones. The CEO took a massive risk in 2013. He took $2 million of company money, right? We maybe had 5 or 6 million probably on our balance sheet. So we took a third of our money and decided to buy Bitcoin, right? And so we bought $2 million worth of Bitcoin at an average price of like $110 or $115 or something like that. And that was his way of saying, you know what, like, this is our bet. This is going to be a thing. And if Bitcoin is going to be a thing, we either like ride it all the way up or it goes to zero and we go under, right? But he was willing to kind of take that bet. And what did he do? He gave 2 Bitcoin to each employee. Okay. So we had maybe 100 employees kind of in the company at the time. And he said, you know what? The best way that everyone's going to learn about Bitcoin is if I gave something to you. And so he made all of us basically create Bitcoin wallets. We had no idea what it was, how to do it, or anything like that, but we had to figure it out to get this thing. And that was our initial education into creating a Bitcoin wallet and figuring out what a public key, private key address is. How do I do this? Because I have to create the address and then give the address to the CEO so that he can send the Bitcoin, right? And I have a little bit more to tell you on this story a little bit later, but that was our first kind of like indication. And frankly, that was probably the smartest and best way to get your employees to learn how this works is actually by doing it yourself and playing around with it. So in early 2013, my fixed income bond trading desk, we decide, you know what, let's start trading Bitcoin, which seemed crazy now. It seemed even crazier kind of back then. Because in 2013, you have to remember that like Bitcoin was like Silk Road, guns and drugs on the internet. Like this is all bad. What are you guys doing? And we were also bond traders. So we were literally trading bonds and Bitcoin, two things that could not have been any like different from each other. We decided to start trading that. But we started to believe through kind of the inspiration and guidance from our CEO at the time that, hey, this could be a thing. So let's start trying to make this an asset class. Let's try to get institutions involved. Let's get high net worth, family offices, hedge funds involved, and start trying to create a trading desk. So that was trying to create a brand new business into 2013. Now, do you remember what happened to the price of Bitcoin in 2013?
It tanked.
It did not. So it started at $13.
2015.
20. So it started January 1, 2013. Bitcoin was trading at $13. All right. So it's gone from 3 cents to $13 in early 2013. Okay. And then during the course of 2013, it does this. It goes all the way up to $1,200. Okay. So Bitcoin literally goes from $13 to $1,300 in November of 2013. I remember, like I said, company had bought Bitcoin like at around $100. We're like, and he had given us 2 Bitcoin, right, kind of at the start. And Bitcoin starts going up. We're like, and it's like $110, $120. And you're like, this is crazy because I'm thinking about like stock market type returns, and I'm making 10, 20% in like a month. Right? They're like, this is not normal. Where is this going? And I remember going to the CEO and being like, where's this going by the end of the year? He told me $200 and my jaw hit the floor. Right? I was like, this thing is going to double this year? Little did I know that we had this massive run in October and November of 2013 of this $1,200 run. In December of 2013, price starts to come down. Right, we have the $1,200 hit back down to $750 or so by the end of the year. But still, tremendous growth in 2013. But this is crypto, right? Things don't really last as long as you'd like it to last. 2014, in February of 2014, Mt. Gox happened. Guys, who's aware of Mt. Gox? What is it? Okay. Magic the Gathering online exchange, correct. In 2014, there weren't that many places to buy Bitcoin. Okay, this is before Coinbase was around. So at the time, there were basically 2 places in the world that were exchanges to buy Bitcoin. One was in Slovenia, Bitstamp, that was recently acquired by Robinhood. And the other was Mt. Gox, which was a Japanese exchange. It was in Tokyo. There was no real exchanges in the US to be able to buy Bitcoin back in 2013 and 14. So at the time, if you wanted to buy Bitcoin, you literally had to like cross your fingers and wire money to Slovenia or Tokyo. Is literally the only way you can kind of get exposure. Mt. Gox was by far the bigger exchange. It dominated the global trading landscape. It had about 70% trading volume globally on one exchange at the time. And in February of 2014, lo and behold, whether it was a hack, inside job, who knows, but they found that they were missing 850,000 of customer Bitcoins. Okay, this was worth $600 million at the time. Tremendous amount of money, but in today's dollars, that's $100 billion of customer funds that were missing from the Japanese exchange. Okay. By the way, this exchange was founded by a guy named Jed McCaleb, whose name might sound familiar. He is the co-founder and CTO of Ripple, of XRP, and then he left XRP and then founded Stellar XLM. So he is a multiple serial entrepreneur, but he was the one that started Mt. Gox before the hack and all of that stuff, before he passed it off. And when this happened, right, I thought Bitcoin was done. Right, the biggest exchange in the world just got hacked. We're here at, it started at $13, goes to $1,300, And then I was like, this hack is so massive. It's all over the news. The price starts tanking. I was like, all right, that was fun, guys. We're going to close up shop and get out of here, because I thought Bitcoin was ultimately done at that point. From a credibility, trust perspective, the biggest exchange in the world get hacked. And what happened? Right? The price starts here. You see, we have some recovery in May, but that is all the way down to about $300 in 2014. So basically done a near round trip from the $100 up to 1,200 all the way back down. Right? That is the big hack. That's February of 2014, and the big red candle, what that represents. End of the year of 2014 at $300. Now, 2015 and 2016, up to the third quarter, this is what I would call the true crypto winter. Okay? I know we talk about crypto winters and crypto summers and things like that, but to me, this was the longest crypto winter that I've ultimately gone through. And largely because no one cared. In 2013, when the price started going up, the news were covering it, right? There were conferences everywhere. Bloomberg, CNBC were talking about Bitcoin. In 2015 and 2016, not one person cared about Bitcoin anymore. And it's one thing to have people like going on TV and talking about how much they hate Bitcoin, right? At least they're talking about it. Apathy. People just stopped talking about it. And for us, that was just trying to start a business. That was one of the most demoralizing periods of time for us. That absolutely made me question like whether or not we were doing the right thing, right? Like, what if Bitcoin just stayed at $200, $300 forever? Like, is that it? Is this what we've worked hard to kind of create the business? It was a very difficult time. So this is basically the run until Q3. This big circle is what I call the crypto winter, because prices hovered between $300 to $400 in 2015, $500 to $600 for most of 16. That was an incredible challenge. And I put product market fit at the bottom. I was like, dude, is a trading desk necessary? Are institutions ever going to care enough to kind of put money into this? That was a true test, I think, of our conviction that certainly existed on my team back in those days. All right, let's share some stories. Spend one and keep one. I mentioned a few minutes ago that each employee at the company got 2 Bitcoin. Our task was to keep one for investment and to spend one. Okay? So all of us had to start Googling on the internet at the time in 2013 to figure out who took and accepted Bitcoin as a form of payment. That was hard because many of those sites were illegal. And some of the more popular sites, there was a site that sold alpaca socks. A nice pack of 6 alpaca socks for 1 Bitcoin. There was the best people found Cuban cigars. So back in the day, Cuban cigars back in 2013 were still contraband. Like, you were not able to import it back to the U.S. Somehow, some company decided that, hey, if you took Bitcoin, maybe that's okay. That probably wasn't, but they came up with it. Said, all right. So some people smartly found some Cuban cigars. They bought a Bitcoin worth of cigars and had it delivered. What did yours truly? What did I do? Wine. There was an Australian winery called Blue Plate Wines that accepted Bitcoin. And I was like, you know what? I like wine. I'm going to give this a shot, and found this place. The wine was mediocre at best. And obviously, it was the most expensive case of wine I will have ever purchased in my life, especially in today's dollars. But that's what each of us had to do. We had to find a retailer that accepted Bitcoin. And unfortunately, I recently found out that winery no longer exists. Hopefully, they kept my Bitcoin and retired, but who knows ultimately what happened to that business. All right. The $1 Million Man story. So there were no institutional buyers when we first kind of got going, okay? And we had one client actually say, "Hey, I want to buy $1 million worth of Bitcoin." We're like, "Oh wow, great! Like this is a first real customer." What we didn't realize that the guy shows up in person, okay, to our office. He had a suitcase handcuffed to his wrist. Literally walks into our office and says, "Hi, I called earlier, wanted to buy Bitcoin. I'm here." I said, "You're here in person." And he said, "Okay, unusual, but all right." He said, "Okay, but we have to like onboard you. We have to run AML, KYC. We have to run a background check." He was like, "No, I'm not giving you any of that information." I was like, "I don't know how we deal with you as a regulated entity if I don't know who you are. I can't just sell you Bitcoin." He's like, "But here's my proof of funds." And he pulls out literally a suitcase of what he said was $1 million. I didn't count it, so I don't know. But the guy claimed that there was $1 million here. Here are the money, proof of funds. I want to buy Bitcoin. And we weren't even allowed to accept cash at the time as an acceptable form of payment. So we unfortunately had to kindly escort the gentleman out of the office to figure out the right. If we couldn't onboard you and we couldn't take cash as a payment, like SEC would be calling on our door, knocking on our doors the next day. But I remember that gentleman leaving and being like, "What did we get ourselves into here? Like, what is this? Hopefully, this was not a regular occurrence." And thankfully, I don't remember it too much of a similar situation. Third book, people absolutely hated us. Okay, and here's why. The earliest guys so we needed sellers, we needed buyers, right? We're a trading firm, we're trying to make markets, we needed both sides. Who were the sellers? They were the early adopters of Bitcoin, right? They're the anarchists, the cypherpunks, the libertarians, the guys that wanted to like live off the grid, be away from the government radar and scrutiny, stay away from me. I have my own money, I have my own power generator, I do not need to be on the grid. And here was, to them, we were a regulated broker-dealer wanting to, "Hey, can you sell us your Bitcoin? But we have to like take down your social security number and we have to run background checks." Like, to them, we were the man, right? We were the government kind of coming for them. And they literally thought that we would take their driver's license and like contact the IRS or something, right? Like that's literally who they thought. So they couldn't trust us as an intermediary. The buyers, oh my God, did they hate us, because like we were like, Bitcoin was not certainly an investable asset class at the time. First of all, it was too small and probably illegal. And I remember, I don't know why we did this looking back, but we tried to go to some mainstream finance conferences, right? There were Bitcoin meetups and conferences, things like that. I tried to go. And there was one conference in particular. In 2014, I tried to go to the American Bankers Association. Okay, they had an annual conference, decided to go, had a booth, and here we are, nicely dressed in suit and ties, just like every other banker, trying to blend in here to kind of pitch them on Bitcoin. They looked at us as we were absolute criminals, right? Like, how dare you come in here and start talking about Bitcoin? And one of the guys I was with had a nice pinstripe suit, and literally the guy said to me, "You should be behind those pinstripes." I will never forget that banker who literally thought we should be behind bars for trying to make Bitcoin an asset class. But so both the sellers and the buyers really did not like us in the early days. So who were our early institutional buyers? Was it Wall Street? It was not Wall Street. Because, as I mentioned, my desk was trying to sell bonds and Bitcoin, right? My bond buyers are happy making 6, 7, 8% in the S&P 500 every year, right? With no risk of loss of principal or clipping 4 to 5% in interest. That's all they cared about, right? Bitcoin at the time was 100x or zero. That's the investment profile of Bitcoin at the time. There was no way that even if the upside of it was 100x, could they possibly risk that opportunity of going to zero. That was the East Coast, New York, Boston mentality towards Bitcoin. And so we could not get phone calls returned. We'd get hung up on, or emails. Like, no one would answer our emails. Not a single East Coast firm would take our call when we were once kind of start talking about Bitcoin back in 2013 and 14. So who did we sell to instead? Silicon Valley. They, the 100X or zero that did not fit the East Coast was perfect for Silicon Valley. That is the venture capital model, right? That is, VCs invest in 100 different startups. 95 of them fail. They might break even on a couple, and maybe there's a Facebook or a Twitter in the bunch that makes the entire return of your portfolio, right? And Bitcoin was perfect. It could go to 100X, could go to zero. It's just like every other investment that they were making, and there was a technology component angle to the investment. So the CEOs of some of the hottest private startups at the time were large buyers of my institutional Bitcoin. So family offices that backed them, venture capital firms backed them, and principals of VC firms. They were our first buyers, and they were doing this in size, right? Like literally 2014, I remember guys coming in and say, hey, I want to buy 25 million, but I want it like 5 million a week. Spread it out over 5 weeks. I want to buy 5 million at a time, and this is 2014 when Bitcoin is like $300, right? So they've clearly done very well in the bunch. My guess is they probably have plenty of money.
Yeah.
So yes. And then, so this is back like 2013, 2014 at the time. So we started the desk, the trading desk at the time. At the same time, we started an asset management business, a side asset management, a fund, a Bitcoin fund. That said, hey, maybe some investors can't hold Bitcoin, but they can hold shares of funds. So let's create a fund vehicle that sat alongside the trading desk. And then we did a big corporate reorganization. Our company split up, so we created a holding company that became Digital Currency Group. The trading desk became Genesis. That's the one I became the CEO of. And the asset management became Grayscale. GBTC, you guys have heard of the asset manager? Anyways, that was the start of DCG, Genesis, and Grayscale in 2014. All right, I'm going to go through these relatively quickly. 2017, ICO madness. So Ethereum had started. So it's not just Bitcoin and Litecoin anymore. Ethereum has started. Bitcoin goes from $1,000 to 20K. All right, so Bitcoin does 20X in the year 2017. Kim Kardashians and the Floyd Mayweathers are launching their own coins. And fraud is absolutely rampant in the crypto ecosystem in 2017. But like Bitcoin is once again back in the mainstream media and news, and you could not be happier. Our trading desk did more revenue in November of 2017 than we had cumulatively done ever from April of 2013 onward. We were that busy with guys wanting to buy, sell Bitcoin, ETH, and a bunch of other stuff. And naturally, 2018 follows a boom market is the bear market. 2018 was a very ugly market as Bitcoin goes to as low as $3,000. So we're at 20K in 2017, back down to 3K in 2018. 2019, we steady, right? We get some recovery, but we still end the year at 7K. And then 2020 hits, COVID and money printing. March of 2020. It is still very fresh in my mind, and I'm sure it is on yours as well. But I remember the second week of March, where the oil markets, oil futures start tanking on kind of COVID fears, which spills over into the stock market and the bond market. Everything is ultimately selling off. Bitcoin is managing to like hang in there, but they start to see some spillage of volatility over. Thursday, March 12th, is a day we refer to as Bitcoin Black Thursday. It opened at 8K, okay? And I remember speaking at a panel on that day as the Bitcoin price continues to fall, okay? And at the start of my speech, Bitcoin is at like 7K. And it goes to 6.5. Then it goes to 6, goes to 5.5, goes to 5. The crowd realizes what's happening as I'm on stage. And they are no longer listening to a word I'm saying because they're just worried about the price of Bitcoin. So much so that the crowd starts shouting out the price of Bitcoin as I'm standing on the stage. I swear to God. 5,000, 4,500, 4,000, 3,000. I was like, where is this? Am I going to have a company by the time I get back to work at the rate it's going? But yes, intraday low was $3,000. It started the day at 8,000. It ended the day at 3,000. A 65, 70% intraday drop in the price of Bitcoin. And it was certainly one of the more scarier Bitcoin trading days of my life. But if you bought some Bitcoin back in that day, it ended the year at 30,000 after the COVID money printing and the checks ultimately hit. So even if you bought it at 8K at the open, you had a nice nearly 4x return on your money come December. 2021, we go from 30K to 60K, back to 30K to 63K. We end the year at $45,000 for the price. 2022, Terra Luna hits, right? This is April, May of 2022. And then we have the credit bubble. The BlockFis, the Celsius, all those companies go under. And then the kicker is FTX in November of 2022. And then obviously 2023 was last year, 2 years ago rather, mirroring 2019. And then we had the ETF approval as the main headline for what happened last year. So let's talk about the Bitcoin price action. So that's 2012, 2013, all the way to the end of 2016, kind of looks like this. This is the line. That volatility that I was talking about, you cannot even tell on the y-axis that the price of Bitcoin did anything. And here I was thinking that Mt. Gox was going to end the Bitcoin action. But you can't even see the blip anymore, given what ultimately happened, right? Because the price of Bitcoin ultimately does this from here. And all of those, a lot of those stories were in that first little bubble that seems incredibly silly looking back now. But those are the years that ultimately took the conviction in Bitcoin and what we were ultimately building to kind of get us to where we are today. Okay. Crypto, before I get to present, any questions? Thoughts? Somebody say something so I don't have to talk.
Was Jordan Belfort one of your clients?
He was not. He was not one of my clients. I won't name drop of who the clients were, but think about some of the Silicon Valley stuff.
You guys hung out though, right?
No comment.
Stratton.
Yes.
So in 2013, actually, so that work to talk about Bitcoin, and like no lawyer would back you up to do anything, to develop anything. And but yet you were trading under-regulated, heavily regulated. Were you in the Cayman Islands or where were you?
I was in New York. So here's the interesting story.
So how did you get away with it?
So we had a broker dealer. So we had an SEC FINRA registered broker dealer at the time that we were trading. We actually filed what's called a CMA, right? Continuing member application with FINRA, where we actually told FINRA we were going to start trading Bitcoin. Okay? They approved it in 2 weeks.
I couldn't buy anywhere.
Yeah.
Officially in the United States, I couldn't buy it.
So we were selling it. I mean, we were institutional, right? So but we didn't market ourselves either. We were a true startup. Yes, correct. We were.
Which keeps today.
Yes.
Yes.
But we were doing it through a broker dealer. And the funny thing is, FINRA let us do it because they had no idea what Bitcoin was. By the time other companies filed the same exact form, they were put into a massive pile of delays where the SEC refused to rule whether or not broker dealers can get involved. So we got lucky in that we were the first movers, and we totally fell under the radar of SEC and FINRA. Because had we tried it a couple of years later, we would have been stuck and not be able to trade it, right? All right. So crypto today. As I mentioned earlier, crypto was weird. It's not weird anymore. It is now becoming a mainstream part of investment portfolios for people. And that is such a huge change in how Bitcoin is viewed. From the institutional investor's perspective today, I feel like there is a divide between Bitcoin and everything else. And it could be because Bitcoin has just been around for the longest period of time and whatnot. And its use case is relatively narrow today, right? Like we don't really use Bitcoin to make payments. I think it's sort of a storage, store of value, digital gold argument kind of for Bitcoin. Whereas like Ethereum and smart contracts and things like that, I think is a deeper story for people to still kind of understand. So I do think that there are lots of investors that are like, you know what, convince me on Bitcoin, Ethereum, maybe. Everything else, the kind of long tail, from the institutional investor's perspective, they're not there. Maybe they'll get there in a couple of years, and maybe it becomes Bitcoin, ETH, and then everything else, and then more and more kind of get added to the mainstream bucket. But if you talk to some of the largest investors in the world, they're just not there yet. Even if they are in on Bitcoin, it's probably Bitcoin. That's probably about it from their view. Staking. So we talked about Ethereum, proof of stake. Obviously, staking is coming to exchange traded products. All the ETFs that are proof of stake products are trying to add staking to their platform. Unthinkable under the Gensler SEC, but certainly with the Atkins SEC, incredibly bullish, I think, for staking protocols and the potential to earn staking rewards within your ETFs. And tax changes on the horizon. I mentioned that Bitcoin has not really worked as a payments mechanism. And one of the reasons to me is the tax treatment. It's impossible for people to spend Bitcoin to buy a cup of coffee if you have to remember your cost basis of the Bitcoin that you just spent, right? And then figure out what is the price of Bitcoin at the time I bought it and that I just spent it. Then I got to figure out the differential to figure out my tax gain or loss on a little cup of coffee. But I'm hopeful that there's going to be some de minimis tax exemptions for transactions under $10 or whatnot. You do not have to worry about taxes on minor, small transactions. And there are some changes, I believe, on the horizon that IRS is going to be working on to allow for crypto payments, not just like stablecoin stuff, but actual crypto payments to be made.
Is that going to be like through the government? So
Yes.
Pay the taxes?
Yes.
Do you know what, like, will that be like on Ethereum or is there any information about
Ultimately it's got to be the IRS guidance of how to recognize gains and losses. And hopefully we won't have to worry about gains and losses for transactions for smaller transactions. All right, RWA talk, real world assets, right? What's real world assets? My simple definition: tangible financial items like real estate and commodities on chain. So obviously there's this magical internet money thought around crypto and Bitcoin and whatnot. But like putting real estate, putting stocks, putting bonds, other traditional financial instruments on the blockchain is what this effort is ultimately all about. And there's been, in the last couple of years, real progress that is being made to put all of our traditional assets ultimately on chain. Now, RWA growth. If you look back to 2019, 2020, 2021, there was very little assets on chain. You see the incredible amount of growth that we've seen since the start of 2022, really, as far as more and more real world assets coming on chain. Now, this excludes stablecoins. So this is just things that you see categories down below. The largest categories are private credit, so loans that are on chain. And Figure is a company that is putting a lot of home equity lines of credit on chain. So they are the largest part of that blue section that you kind of see over there. And lately, with the entrance of BlackRock and Franklin Templeton and those guys putting tokenized money market funds on chain, we've seen a tremendous growth in the U.S. Treasury debt pile. That's the red pile. That's kind of the second largest category. We're only at 25 billion, so it's still relatively small. But considering that we were basically at zero just a few years ago, there's tremendous amount of momentum for this chart to continue to grow going forward. All right. So who's in this space, right? Who's doing this? At the top, as I mentioned, BlackRock, Franklin Templeton. These are traditional financial institutions. These aren't startups that are leading the way, right? These are old school financial institutions and asset managers are leading the way in putting tokenized assets on chain. As I mentioned, private credit is growing fast. So Figure has a HELOC business, and there's a company called Maple that offers crypto loans. They're a large part of that growth ultimately as well. And then DeFi, right? So decentralized finance continues to grow. And by allowing some of these tokenized money market funds to be used as collateral on chain, it is actually enabling the margin trading capabilities through the use of real world assets, which I think is really actually pretty cool and a huge growth area ultimately going forward. And there's a huge battle right now as to which blockchain is going to win, right, for RWA assets. There's obviously Ethereum is going to be like the legacy chain here, but we've seen new entrants like Solana come into the space the last few years. There's guys like Avalanche and Polygon, and Ripple is trying to do something with their XRP ledger. Bitcoin might try to do something with their layer 2 and scaling solutions. And so ultimately, what does the world look like? Is this like, hey, we're going to have like 15 different blockchains trading different assets? Or do you think a lot of other assets are going to pick a winner, right, and converge onto one layer 1 for transactions kind of going forward? That is a huge question mark. And maybe the future winner has not yet been created yet. Who knows? But the questions are going to be, are the legacy financial institutions and the big banks, are they going to trust Ethereum? Right? Are they going to trust Solana? Or will they need to create some whatever Wall Street version of their blockchain that they trust and that they created, and not like a bunch of hackers, in a basement that ultimately kind of started that blockchain? Those are big questions that figures out like how will stocks and hot stocks, bonds, funds ultimately be traded and settled as more and more assets come on chain. So market comparison. The equities market globally is about $125 trillion. Okay, that is the size of the equities market. Fixed income is very close. It's 150 trillion globally. Commodities is 140 trillion. It's kind of remarkable how these three markets are kind of relatively similar in size. And real estate, $350 trillion of real estate assets around the world. All four of these things are largely not tokenized yet, but sure, could they be at some point down the road? Absolutely. Stable coins, that's today. $250 billion. It is a tiny, tiny little dot compared to all of the other legacy financial assets. Tokenized assets, you can't even see it, okay? That is the $25 billion that I showed in the previous chart, that dot is ultimately so small that you can't see it. And then crypto, 4 trillion. That's kind of where we are, right? But like we're living in this right-hand side of the world, at least I have been the last 15 years. But like the real opportunity for growth is look at the size of these other bubbles and for all of these assets to ultimately come on chain. And my view is that most of the tradable assets will be on a blockchain at some point over the next 10 years. 10 years, that's my bet. Now, look at all these companies. These are logos and a subset of all the companies that's in this RWA space today. This is not comprehensive by any stretch of the imagination, but like there's custodians and wallets, there's exchanges, tokenization platforms, data guys, DeFi guys, all of it are all trying to make a market and a business in this asset class today. And as I mentioned, the asset class is only $25 billion in total size. So in my personal opinion, there are way too many companies in this space for the revenue opportunity that exists. Every single one of these companies likely is losing money from the RWA markets today. But They're all doing this because they want to convert those into those bigger pies. And that's the revenue and market growth opportunity for them to be one of the first movers, to get involved in a space. And directionally, that's where things are looking like. We are going in the RWA market landscape eventually. All right, future outlook. Where are we going? So here's what I think. The ability to have tokenized assets will make it easier to get loans against them. So use as collateral to get loans. If I can tokenize my house, and if I can take that token and put it on my whatever Schwab or whatever brokerage account and get some loan to collateral ratio loan against it and use it as a margin loan, like tokenization is a tool that will allow for more collateral, more eligible collateral to be created to ultimately get loans. Tokenized stocks and bonds. I do think that use of stable coins, whether that's USDC or Tether or however way the stable coins plays out, are going to be the method how interest and dividends get paid going forward, right? So stocks and bonds on chain, interest payments and dividend payments will be made by stable coins directly into your wallet. I think some of that is already happening, and I think more and more companies you'll see will do that. And then real asset exposure. Tokenized RWAs provide direct exposure to tangible assets within the digital currency space. Just by owning a fraction of a property and having a token actually gives you real asset exposure as opposed to just purely like kind of crypto investment use cases. Now, cross-market potential. I think this is some of the cool stuff that's happening. So if you live in a country in the world that doesn't have access to like NASDAQ or the NYSE, right? The kind of the brokerage pipes don't exist. And you want exposure to NVIDIA stock, for example. You can't under traditional ways. But tokenized forms of stocks will allow people that, as long as they have a crypto wallet, be able to get exposure to NYSE and NASDAQ listed stocks. I think that's pretty cool to kind of bring investment opportunities around the world to people that they otherwise could not have. On the other hand, there's a lot of countries out there that want that foreign investment, right? If you're in Nigeria or if you're in some whatever sub-Saharan African country looking for foreign investment, if you tokenize an asset and ultimately make that available to U.S. investors, that is going to be far easier to get them involved than looking through a 1,000-page private placement memorandum and signing a subscription doc to get exposure to foreign investment. So now countries around the world are actually being more active and putting things on chain to enable it to make it easier for foreign investment into local projects. And I think we'll see more and more of that from growing countries going forward. All right, so market growth drivers. What's going to drive this effort? Obviously, wider adoption and increasing institutional interest. I think more and more time goes on, this stops being weird. This stops being like some strange esoteric idea. And that time will get people more and more comfortable with the idea of tokens and investing in tokenized RWA assets. Technology has to advance. Blockchains, we talked about L1s and L2s. But I do think the maturity of various technology is going to power market expansion. Regulatorily, like we've never had a more friendly regulatory environment here in the US than we do now. And so I would argue that now is the time to set rules, create laws, pass regulation that are going to be very, very difficult to be overturned potentially down the road. And it's not just the US. I think countries around the world realize that countries are in a race against each other to kind of create the most crypto and RWA asset-friendly regulatory regime to invite companies to come over, create jobs, experience growth, and ultimately be able to collect tax dollars from having a crypto and RWA friendly world. All right, so what can happen? What's possible disruptions of all of this? Obviously, like if tech fails, that's a huge no-no, right? That is going to be a massive liability for the industry going forward. AI, how does AI change this or hinder this? I think that is a huge question as to how the adoption of AI plays into the trading ecosystem worldwide. and then we can talk quantum computing. That's probably a topic for another day. We probably can talk about that at some point for a long time to come. So, in conclusion, worlds are colliding, right? Crypto and TradFi used to be like oil and water and didn't mix, but now it's like getting closer and closer together. And now we're, I heard something about like regular stock exchanges can start trading Bitcoin now or something like that. SEC guidance that NYSE and NASDAQ could actually start trading Bitcoin. So to me, the worlds are absolutely colliding, and we no longer probably have to separate between the two. I think it'll be one and the same going forward. Tokenization is the future. I do fully expect most financial assets to exist on chain. I gave a 10-year time horizon to make that happen. And then implications, right? Like if these two things are true, if worlds are colliding and TradFi and crypto were going to one, and everything's on chain, what are the downstream effects for your business, for your companies? Does it I think it's important to start thinking about, okay, if these things come to pass, what does it mean for my job or for my company? How should I think about this? Because I do think that it's never too early, I think, to kind of start thinking about longer term implications of some of this. And potentially how to incorporate that into your lives. All right. Thank you very much.
We have plenty of time for questions. So who's got questions? I know some of you do.
Yes.
Your company is into tokenized securities. Any securities tokenized yet?
Yes. So it's so we've traded. We have tokenized NVIDIA. We have tokenized Google. We have tokenized Coinbase. But here's the problem. In the U.S., we are currently not allowed to sell them to U.S. investors, and the reason is. So how tokenized securities ultimately works is there's a share of NVIDIA. There's a stock certificate. It sits at a bank. It's held at a trustee, but the shares stay there. And then you create a token that represents ownership of that stock, right? So it's over here. In the US, under existing US law, this token is a derivative of this share, okay? It is not an equity. It is a derivative. And unfortunately today, this token then is governed by the CFTC, right? Not the SEC actually, right? And regular derivatives are not available to U.S. retail investors, right? So you have to kind of get to a point where, and that's one of the conversations I'm having with the Washington, D.C. folks, is that we got to change the law. Just because something is tokenized, like it shouldn't trade on two different venues under two different regulators. It's effectively the same thing. And that these tokenized forms should be trading on a regular broker-dealer or an exchange and should be made available to U.S. investors. So what I just mentioned here, they're trading in Europe. They're trading in Africa. They're basically available to non-U.S. investors, which is silly that all these companies are in the U.S., but they're more available to U.S. investors. However, if you lived in the US, you just buy the stock. You don't need to buy the tokenized form of the stock. You just buy the underlying NVIDIA or the Google or whatever, because the liquidity is way better, obviously, in the equity markets than it is in the tokenized market.
Do you guys have any other assets besides stocks that you guys are tokenizing?
So I listed 4 different asset classes. I actually think stocks are last, like at scale. Stocks are going to be the last thing to get tokenized. And that's because, as I was kind of just saying earlier, the stock market today is incredibly liquid, right? For the major names, the Apple stocks, the Googles, like the bid offer price is a penny or a fraction of a penny, and you execute millions of dollars of trades within that market. The tokenized market is incredibly illiquid. We don't have active market makers that are sitting there trying to quote the 24/7 market, right? And think about it. How do you trade 24/7 when the stock market closes, right? You have 9:30 start, 4 p.m. close, but you have the tokens that trade on a 24/7 basis. How do you do that? And there isn't a good way to do it. What tends to happen is that the tokenized version and the stock trades in line when the stock market's open. They trade kind of roughly around the same level. 4 o'clock comes, the stock market closes, or even during extended trading hours, or say 6 p.m., 7 p.m., right? You're like, okay. Then the tokenized version starts trading way wider than the underlying market, the closing price of the stock does. And that's because the market maker can't hedge their trade. Because the underlying stock market's is closed, they can only trade the tokenized version of it. And so the market maker has to take that risk of, hey, can I still hedge my trade when the market opens back up? What if I'm under in the trade, I've lost money, right? And so spreads tend to widen out a lot when the stock market is ultimately closed and trade. We got to get that fixed. To enable true 24/7 trading, the underlying market has to be near 24/7. Otherwise, the market makers are carrying tremendous balance sheet risk because they can't sell or buy the underlying to kind of offset their token position.
I have a question, but this is I've only been doing this for 2 months, so it might be too elementary for this, but you can just stop it. As a business owner, so they said that they go to Steak and Shake, and Steak and Shake accepts Bitcoin.
Mm-hmm.
How can I, as a business owner, be ahead of all of my other business owners and accept Bitcoin? How is that? How do I do that?
So there are there's payment processors that accept Bitcoin.
So I would just integrate with that.
So ultimately, the question though, for most businesses, do you want Bitcoin? Most businesses that accept Bitcoin, like, sell it right away for US dollars, right? So they don't actually touch the Bitcoin. The payment processors convert it for them, and then all you get is US dollars, right? And so, and that's because, like, most businesses cannot pay their suppliers in Bitcoin, right? You have a US dollar exposure. And what if you took Bitcoin and kept it and the price drops 60, 70%, and all of a sudden you're like, hey, do I make my supply chain payments or whatnot, right? It's too risky given kind of volatility. So if we ever get to a point where you are able to make, supply chain payments and your suppliers take Bitcoin, then that actually is more of a use case to take Bitcoin and keep it that way, and let's use Bitcoin as your working capital as opposed to US dollars. But there are payment providers that accept Bitcoin, but also do the conversion for you.
So how do you get liquid in the tokenized market, or for the liquidity there for real-time settlement?
So here's the way I think it works. Today, crypto guys are used to 24/7 trading. Crypto market makers obviously naturally make markets on a 24/7 basis, right? But they don't have the licensing to touch securities. So they cannot touch traditional securities because they're not broker dealers and they're not allowed to touch securities, right? So in the traditional market makers on New York Stock Exchange or NASDAQ cannot operate 24/7. They're used to markets closing and going, right? And the tokens, you need a custodian. And we don't have a token custodian for security tokens yet. I'm hopeful that a BNY Mellon or State Street or Northern Trust or somebody steps up to be like, hey, I'll custody your tokens for you. But today it's all self-custody. It's like MetaMask, right? Like, you're holding your stock portfolio in your MetaMask. You can do that as an individual. You can't at the institutional level. So I think it's a few infrastructure related things, as well as, hey, you really do have to operate 24/7 to be able to do it. And the current market makers can't do it. So today the tokenized market falls in between that crack.
And when that happens, you bring liquidity.
Look, if for some reason, there's no reason that today the liquidity that exists in Apple stock, tokenized Apple should be just as good, if not better, in a tokenized form. It's just like the transition is going to take quite a bit of time. And the argument is the traditional. I posed this question earlier to somebody. I was like, do you need a New York Stock Exchange, right? Or do you need a NASDAQ? Do you need a DTCC? In this on-chain world, can we circumvent a lot of the existing service providers and infrastructures and do DTCC settlement, DVP on a smart contract, right? Why do you have to do that and kind of go through a DTCC to be able to do it? So look, those guys aren't just going to go away. They're not going to wave the white flag and be like, hey, yeah, go ahead, do business around us, you know? But like, hopefully we're kind of getting to a world where you're not reliant on centralized infrastructure as much in a smart contract enabled world.
You said that tokenization of stocks could be last.
Yes.
What do you think is going to be first?
So, sorry, good question. And I meant to say it in my earlier answer, and I didn't. Because of the liquidity trade-off that exists today, where the untokenized regular version is liquid, the tokenized version is extremely illiquid. The things that are already illiquid today are going to be the first ones to get tokenized because there's no liquidity trade-off, right? It's illiquid in the regular markets and it's illiquid on chain. And those are going to be things like corporate bonds. Corporate bonds are actually relatively illiquid. Forget treasuries for a second. So corporate bonds, I think, is one. Funds. So funds are typically not really traded all that much. So this is private equity funds, venture funds, whatnot. I think those are going to be the ones that don't regularly trade are going to be the ones that can get tokenized. I've been working on a collateralized loan obligation, a CLO, that is going to be on chain. I've been doing it for 7 months now, but that'll be on chain. So it'll be like products, funds, corporate bonds. I think those are going to be the ones to go on chain first because they're relatively illiquid off chain. Things that are incredibly liquid on chain should be the last ones because those are like, if liquidity dries up the moment you went on chain, like that would be an absolute disaster scenario for everybody involved. I literally told a large company, to not IPO on chain because we weren't ready. Right? Like infrastructure, the companies, the tech has to all like scale up and level up significantly before any larger company should IPO and only do it on chain. I think that would be insane to try to do that today. But hopefully that changes.
What does an on-chain IPO look like?
So it's literally your tokens representing shares of equity in the company.
Would it be similar to like an ICO? Or?
Kind of, but it's like a true equity. Yeah, tokenized equity form.
And then would that be open to the public, or is that?
It should.
Right.
Yeah, it should be.
What about tokenizing like supply chains or actual commodities, such as minerals?
Mm-hmm.
Is that something that is going to be last because of how?
Ultimately, I think it's a question of if it's for like actual utility, you don't want it tokenized, right? Because you actually need the underlying to like do stuff with it. But if it's an investment case or something
whiskey,
like that,
right? Like
sure. Collectibles or whatever, 100%. I think it should be.
Ledger and IBM actually work on a private chain that does what you're asking.
Oh, really?
Supply chain, yeah.
Interesting. So what's it called?
It's Hyperledger and IBM's. I forget what the project is called. Just Walmart uses it today.
Oh,
a lot of other companies.
Interesting.
It's a private chain and it connects to IoTs. From Pfizer's using it from the source, so as soon as it gets taken out of the ground, it's on their blockchain.
Cool.
And the process, if a container shakes or rattles, it'll send the information and it's all on chain, on their private chain.
The UPS is doing interesting stuff.
There's a lot of
they're ahead of it. This is the private market here, right? The public market essentially just innovating in real time because of efficiency, right? And then the private sector hopefully coming along. But who is so the Republic is acquiring INX.
Yes.
What direction do they think this market is headed?
So I think that they probably, if I had to guess, they probably have a shorter time horizon than I do about assets coming on chain. But they've also got licensing in the US and the UK. I think they recognize that in some things, Europe is still ahead of the US, regulatorily, as well as like some of the financial institutions running pilot programs and things like that about issuing tokenized bonds and whatnot. Banks in Italy and in the UK have done some of that already. So, I think US is always in a tough spot because, obviously like US tends to like move last. And I don't necessarily blame them for it, because I feel like they've got like the most to lose by bad policy and bad rulemaking, right? Countries like Singapore that are certainly smaller, I think, can afford to somehow like mess it up somehow. The US probably can't come up with bad rules and regulations, so they tend to like wait for everybody else to come up with something and then come up with their own version, maybe trying to a trial and error process from learning from other countries. But at the same time, they're going to lose the competitive race, right? And so they're then betting then that they could catch up. They're the U.S. And there's the money and the largest economy in the world, and that even if they aren't first to adopt regulation or whatnot, that their GDP and money will allow them to kind of catch up to them.
I have one more question.
Yes.
So you're saying that the assets are coming on chain. What is something that somebody like myself can do today because I see that coming to make money? Like, what do I go home and do today besides buying Bitcoin or Ethereum? Like, what is something? Assets are coming on chain. I knew it, so I did this.
I think just because an asset comes on chain, I don't think necessarily should lead to like value accretion right away. Right? So just because real estate is going to come on chain, I don't think you should go out and buy a bunch of houses. I don't think that's ultimately the play. I think that, the interesting opportunities are going to be companies that can live in both worlds. Back to your question earlier about, hey, how does the tokenized world and the real world play? My guess is because not everybody can play in the crypto world and not everybody can play in the traditional world, there are going to be some companies that will develop that expertise, okay? And there will be arbitrage opportunities to be made as to why two things that's exactly the same thing are trading at different prices just because one is tokenized and one is not, right? And that's where the companies like Jane Street and flow traders and some of the largest market makers in the world that do live in both worlds literally can just take risk-free effectively because they are able to trade in both environments. So just because nothing I said should be like, hey, this is coming, so make a bunch. I think it's just like preparedness more than anything else, because I have a feeling one of these things where like once it kind of starts, it won't stop. And it'll be harder to adapt if you haven't kind of built your business with the expectation that something like this is kind of come down the road.
For the everyday person, the way you might capitalize is just familiarizing yourself with this landscape, learning essentially becoming efficient, in this technology so that you can jump on these new jobs that are going to jump up left and right. If you're looking for startups, which are going to be a dime a dozen here and already are, if you have this skill set, if you speak this language, right, you'll get hired. You'll have that competitive advantage. And just for an example, get some skin in the game, right? Hold on to these scarce assets. Dollar cost average, right? Buy a little bit every day instead of buying Starbucks that day, right? Cold brew at home. Spend your Starbucks money on Bitcoin. Do that every day, right? And if you do this every day, it'll compound. And those price swings, when you see those God candle moments, right, you're gonna have significant upside during those phases. And he was showing you the scale compared to these other $1 trillion industries where we're still so early, right? So my son, he's 9 years old and he's got a Bitcoin piggy bank, right? And he wants to see it every day because it's worth a lot, right? And that's because he's been putting a little bit consistently, and that's something that blew his mind, right? To start with $50 and now have thousands of dollars, it's just insane, right? So this is how you can have real upside, and it's not going to be overnight, right? But it will happen. So, Bitcoin's about a low time preference, right? Just like kind of looking at the big picture.
The other thing I would say is, I know we're talking about investments and things like that. I think it's important to like have fun with it too. So I would spend time playing around on DeFi, right? Like go on Uniswap, figure out how this works, how it's different than centralized exchanges. And then like the prediction markets, I think are gonna get legal. I saw that today, the Poly market got the approval to start making prediction markets. So this is prediction markets. You can start betting, yeah. And using crypto as kind of the tender. Then you can like create markets and start betting on presidential elections and who wins this match and whatnot. Real like event-driven type stuff that like crypto and some of these platforms will enable you to be able to do. So, you know, from that to like getting used to making stablecoin payments, right? Just like paying, you know, somebody in USDC, right? You can just do it with your friends, like pay them, you split a dinner and you pay them $20 on USDC. Like that, like kind of getting used to digital wallets and just everyday use, I think is going to be a helpful tool skill set to
leverage AI to take on new jobs like freelance work and get paid in Bitcoin, get paid in crypto, right? You can work around the globe on Fiverr, OfferUp, whatever, on Upwork and all these different platforms. With AI, and there's so many opportunities, you just have to jump on them, right? And if you get paid in Ethereum, you know, you wait a couple months, so it could be double your paycheck, right? It could have doubled in a month, right? And that's not going to happen in dollars, right? It's not.
Do you keep that Bitcoin that you the company gave you?
I do. I still have it.
Yeah.
I do. I still have it.
That's awesome.
Yeah.
Did you add to it?
Oh yeah. Yes. I
know Paul's been talking strictly about Bitcoin, but besides investing in Bitcoin, investing in the underlying blockchains, the infrastructure, because you can buy, you know, they're called shares, but they're coins, Solana and XRP and Avalanche and all these blockchains that are going to enable the tokenization of the assets. So you can do dollar cost averaging into Bitcoin and Solana and some of those others, and as they become more and more used for these purposes, they will become more and more valuable.
Can I ask one more question? I know I'm past my question amount, but since you were the pioneer of Bitcoin and you kind of saw what was coming, well, I mean, you in it longer than anyone in the room. So the reason that I got interested in, I was telling Tracy that I wanted to, I kept hearing XRP, and I was like, okay, I'll go buy that stock. And I was like, why can't I buy this? And then I realized it's not a stock, it's crypto, and that's what kind of led me down this path. So I bought a bunch of XRP because the whole thing was like, this is it, and someone who doesn't know. What is your prediction for XRP as a pioneer of Bitcoin?
Prediction for XRP. So here's my experience with XRP. I'll start there. When XRP was first starting out, they were desperate for like traders, right? And I remember the first time they said, "Hey, why don't you buy some XRP?" I went to the exchange where the guys said I can buy XRP, and the order book was empty, totally empty. I said, "There's nothing to buy." There's, "Oh, let me put some orders up." It was literally like that, like very manual, almost peer-to-peer buying of XRP. And I've never gotten fully comfortable with the fact that Ripple, the company, owns so much. Okay, and the way that Ripple has historically made money is by continuing to sell their treasury XRP to the market, right? And so, like, they have so far, like, struggled, I think, to kind of come up with, like, revenue sources away from, like, just selling XRP to the masses, right? The 2017 bull market that I talked about earlier drove XRP to, like, it started the year at like 10 cents. And they went to like $3, right? I was like, what? It's another crazy, right? But then all the SEC regulation, like lawsuits and things like that started against XRP, which kind of kept the price of XRP like 50 cents, 60 cents for a long time. That overhang is now gone, right? So the SEC settlement is now gone. I am So Brad, I've known Brad for I don't know how many years, and he is. I think he is certainly very bullish on kind of institutional bank adoption of XRP and potentially replacing SWIFT and whatnot for international money movements. But like I've heard that story for I don't know how many years without a ton of traction and like progress to be made for it. So and like the supply of XRP is like I don't even know how many billions, but it's a lot. Like it is not, you know,
Does he even have a forecast?
like they're supposed to,
Yeah.
right?
Okay.
But like, so I struggle with like whether XRP goes to $4 or $5 or whatever it is. I have no idea where it ultimately goes to. But like that is purely based on speculation and like numbers go up as opposed to like real tangible stuff that Ripple, the company, has been able to do. Well, if they get there, I mean, look, the opportunity is tremendous, right? But I have really kind of yet to see that commercial adoption use case for XRP that they've been talking about for a long time.
Thank you.
Yes.
What do you think the potential possibilities are with things like BlackRock creating their RWA on their private chain and then sending it cross-chain to a public chain through cross-chain interoperability?
Yeah, look, BlackRock is one. JP Morgan, right, recently is talking about they've had a private blockchain for a while. Now they want to like build on a cross-chain, utilization. Ultimately, I'm a seller of private chains generally. I don't like them. And I'm a public chain believer, number one.
Very good.
And, but like, I'm all like, as far as cross chains, that good, bad?
Do you see any like possibilities of say making creating our real world asset through whoever and then sending it out into the world, into the wild, like into the public? Now it's on a public chain and it can be bought, traded, or it's out of their ecosystem.
Mm-hmm.
Do you see any like creative things that can happen with that, like things being built in this?
Right, like it's exit liquidity for them. Like BlackRock is probably going to keep it private until they've made as much money they can possibly can from it, and then sell it to the public markets.
Do you know if I own the real world asset, if I'm custodian to a friend as a gift?
Mm-hmm.
I mean, no one's making, but now that asset's out there on the public chain.
Yep.
Do you see possibilities with like loan or
So
using that asset?
it's a couple different things. So depending upon what like ERC protocols you might implement, there are some stuff that you can send and some stuff that you cannot, right? So there's whitelisting of stuff that has to happen before you're able to transfer assets to someone else, right? So in some cases, BlackRock might say, hey, before you transfer that asset, I need to know who you're transferring it to, right? So yes, it's in the public chain, but like BlackRock has to know who you're sending it to, and BlackRock needs to basically AML KYC or something like that, the receiver of the asset that you've got, right? There are guys that are actually saying, hey, you can transfer it, but you can't like get interest payments or anything like that until you've been KYC. So there are interest paying securities, so like stable coins or whatnot that pay interest, right? That I can transfer to someone, but they can, once they have the token, they cannot receive interest until they've emailed KYC with the issuer. And so if all they want is the principal part of it, I guess they don't care. But I think there's going to be some restrictions depending upon who the issuer is.
One of my issues on not following that question is that there's going to be a point, and I think we're tending to do this, that there's so many private chains that are going to be out there that in my point of view, there's no difference with the banking. Private chains, all these groups have a chain, and we're so small that we can direct wherever this chain is going to go, which a public chain cannot do.
Yeah.
So, but, because of, the big institutions are coming in, they'll all have their private chains, so it won't be any different than the current traditional banks.
Yeah, that was my issue with tokenized deposits.
Yeah.
Right, like I can I can have a JP Morgan Chase account and tokenize my deposits, but I can't send it to John because John doesn't have a Chase account, then it's useless to him, right? So I can only send it amongst my fellow JP Morgan customer clients, but every bank ultimately kind of creates that stuff. So I think they're going to move on to a stablecoin standard rather than a tokenized deposit standard. It's probably my sense.
Yeah, who's solving that problem? Like, who does it the quickest for the cheapest?
Yeah, look, I think
Because it's ultimately going to turn into use case, I would think, whatever company that is.
Mhm.
Use case is going to drive, I think, the future, I would think.
it's funny. So obviously USDC has a tremendous head start, but and Tether is its own beast, right? The most interesting thing, though, I was talking earlier, is not amongst the banks, but to your point about use cases. The state of Wyoming is issuing a stablecoin. Okay, it is the first state or territory that is issuing not a CBDC of sorts, but their own stablecoin backed by the US dollar. Okay, so the Frontier token, and they are starting, and they're on like 8 or 9 different blockchains. They're layer 1 agnostic. They don't care if it's on ETH or Solana or Avalanche or whatever. They just want to grow assets in AUM. They take those dollars and invest and buy US treasuries with it. And then they'll earn the interest income. Their goal is to eventually be able to pay for their state budget, okay, with the interest income that is earned by the stablecoin. And eventually what they want to do is to share some of that interest with the token holders themselves, okay? So make it an interest-bearing state-issued stablecoin. That, whatever, the treasuries is earning 5, maybe they pay out 1.5 to the token holders, and they keep 3.5 for themselves. At scale, a state like Wyoming could potentially pay for a significant portion of their state budget with this, right? And in their mind, they're like, look, then I'm not dependent on the federal government anymore. I can just basically say, I don't need federal funding. I can self-fund my own business in my own state. And they've got the independence and freedom to kind of make the rules that they ultimately want for their state, right? So I think, and they're going to obviously incentivize Wyoming businesses to start accepting this token as a method of payment. And if you're earning yield on it, it's better than earning 10 basis points on a bank account, right? Even if you're making a point and a half. And so they're obviously going to accept tax payments. State tax payments can be made using the Frontier token and whatnot. So there's a ton of businesses that I know the state is talking to about, hey, getting involved, and internationally too. This token can be owned by anybody. It doesn't have to be U.S. citizens. It could be international, everywhere. So I'm expecting, by the way, competition. If this thing is going to be successful, every state might have its own token or coin and whatnot. It's their own way of creating their own currency, even though states are obviously not allowed to create their own currency. They kind of are by issuing their state-enabled stablecoins.
Anything gold pipe?
And there is gold-backed stuff. Yeah, there's tokenized gold is a thing. Yes.
Do you think if the states start doing something like that, they would ultimately look to be independent of the U.S.?
I think it gives them the option. Well, I don't know if they want to be independent of the U.S. because then you have to field your own military and all of that stuff. But
if they're making their own laws.
But interestingly, though, the states already have kind of their own laws anyway. I would think, though, that initially I was like, is the federal government going to be okay with this? Right?
Exactly.
Right.
They're buying the dollars.
But they're buying treasuries.
Yeah.
And I think that's the big mitigant here. The U.S. government is going to have a buyer of the debt that they're going to keep issuing in the states themselves. So they do not want to eliminate potential buyers here at scale of their own debt that's going to be issued by the federal government. So I think they are reasons for them to not fight this. But then it's obviously way too small for now for them to kind of care about. But down the road, who knows? I don't know what this is going to ultimately lead to.
Is it even possible with the volatility, since price discovery is still being had and all that with Bitcoin, is it even possible to have a stable coin pegged to Bitcoin
I don't know, you just blew my mind. I don't know, it's possible, I guess it's possible, but yes, I think the volatility is a factor.
It's a problem right now, yeah.
No more petrodollar, have an Bitcoin dollar.
Right. And that's why, because when we,
Isn't that what Terra Luna tried to do?
we're the Bitcoin meetup, Bitcoin blockchain meetup, but like all these other coins, there's utility, there's value in all these different offers for sure. It's an emerging technology, right? Web3 in and of itself is just the evolution of the internet, right? It gives you ownership, which is huge. But the reason we're Bitcoin first is because it's the only decentralized currency. And that really is unique. And like a first of any, right, it's capped. It's a hard asset that will never be more than 21 million, right? And that really rewrites the rules of value, right? And that's why we want to, like, you can play around in these different tokens, but if you want to like play it safe for the long haul and have multi-generational wealth, then park it in Bitcoin. And the most important thing we always want to stress here is to learn self-custody, right? You can participate in all these exciting different, protocols, different DeFi platforms. There's a lot of upside to be had for sure, right? But if you want to really realize the promise that Bitcoin offers, that is actually as revolutionary as the founding of the United States was, is to become your own bank, to bank yourself, right? And you can do that with Bitcoin. And you can take that money with you anywhere, anytime. And that really it changes the rules, it changes the game, and it incentivizes a cooperative relationship between government and citizens. So that's why we want to always push that, right? You can have number go up with any token any day, but if we all only care about profit, then we're going to sell ourselves short. So focus on the fundamentals of sovereignty, and that's what Bitcoin captures so well. And guys like him have been around since the beginning. That's when Bitcoin was like the only one, right? So since then, now it's just insane to see what's happened. But it all began with Bitcoin. Well, not necessarily, but Bitcoin was the first network to be adopted worldwide. It is the most decentralized global computing network in existence, right? Solana can't compare to that. XRP can be shut down if it's a centralized server rack, right? If like one entity could shut off the entire network, right? That can't happen with Bitcoin. And Ethereum used to be decentralized. Now it's not so much because again, it wasn't as globally distributed as Bitcoin is. So we just want to make sure that we impress that on you every time you come here. So be your own bank. And if you want to know how, come here early. We'll set you up, or come to our offices, or listen to our podcast.
What is your podcast?
Well, it's Cypherpunk'd actually, and we just had Michael Moro on today, so you'll see that episode. It's Cypherpunk'd. The Cypherpunks are the original Cypher CY Cypherpunk'd with a D and a underscore.
Consensus.
One more question, Michael.
Yes.
Is your INX going IPO? I think I saw it somewhere.
Is what?
Going IPO. You guys were going IPO.
So we're actually public already. We're public in Canada, but we're being bought. So we're going private again. So we're being acquired by Republic, and Republic is a private company.
You have a token, right?
We do have an INX token, correct?
Where is it available to buy that token?
On the INX exchange.
Oh, okay.
Out of curiosity, how many tokens are currently on the INX exchange?
It's a good question. There's probably 20 security tokens.
20. And in order to get on there, is it the same kind of stringent regulatory?
Same name
like,
as
as Coinbase, like the same strict requirements, right?
I mean, even stricter because we have the SEC, FINRA.
Yeah.
And that's an oversight that Coinbase doesn't have.
Oh, really?
Yeah.
Huh? I did not know that. Very cool. Awesome. Where can we find you? Where can we support you? When's your book coming out?
You should write a book.
I should-
That was a good
No,
story.
the stories I can tell like would burn bridges, absolutely. Like, everyone that I want to keep. So, I'm Michael Moro on Twitter, just one word. Same thing for my Telegram handle. And then you have INX.co is the company's website. Thank you, everybody.
Thank you.
Take some cookies home if you want.